for joining in. Well, we have Dipan Mehta as well, Director Elixir Equities. Hi Dipan, what a time to join in. Nifty is just broken 17,000 odd. We're hovering around those levels. A lot of retail audience out there will be a little worried getting to this weekend. Your take, how do you approach the markets from here on? Should you be keeping your shopping list ready? And if yes, what's on your shopping list?
Yeah, good afternoon, Nigel, and thanks for having me on your show. And I think that the markets may correct a little further from these levels as well. And sell at rallies should be the strategy over the next few weeks or so. And while we may have a shopping list, which may have a few banks and auto ancillary and some of the economically focused companies, but for the time being, I think it's important just to stay light in the market and not extend yourself, even if you have money to invest. I think to wait and watch may be more a profitable strategy than jumping it at this point of time. What we are seeing is the first serious correction since the revival of the markets post the COVID scare, and we had a big correction at that point of time, and the markets have been rallying right from March, April of 2020 almost relentlessly. And now we are seeing the first threats emerge of another COVID wave, and even the earnings season was not that great. And technical and liquidity wise also the market is quite vulnerable. So I think it's time to play a bit safe. And if you still want to invest, then of course there are the defensive sectors like pharma, like IT, and to an extent FMCG, where one can certainly hide to preserve capital. But I think in terms of chasing growth companies, you should just put your investment strategy on hold at this point of time.
So you're kind of echoing what Jeff earlier said, have enough cash on hand and don't jump in because prices have corrected. This is the first, it is the first sort of, meaningful correction we have seen. About almost 8.5% off the highs is what we have. By the way, the Nifty is now back at almost the day's lowest point. So we're down 517 points. The low, the low was 16,985 and we're at about 17,020. So just 35 points off the low, and it's a sharp one that we have on our hands. Where do you, since you're saying that you should wait, which sectors do you think are still prone to, still have maximum downside, in your opinion, Dipan?
See, I think by and large, specialty chemicals was not that great an earnings season. You could see the stock slipping from there. A lot of the unlocked trade companies could be hotels, could be aviation, retail to an extent. I think they may get impacted. Valuations are quite rich. And let's not forget the new age digital businesses, the likes of Zomato or Paytm, Nykaa as well. Policy Bazaar, I think they may also get impacted because it's not just the earnings growth, but P's also get compressed when markets are in declining mode. So these are the high P companies. I think anywhere where we are seeing high P's, one should get a bit careful. Even in building materials, there are a lot of companies trading at very rich valuations. Those are the pockets I would like to be a bit cautious because it's very easy to, earnings will not change much over the next 2-3 quarters. It's just that the PEs will compress and that will lead to further stock price corrections.
Okay, stay with us, Dipan. By the way, the markets have seen some bit of tapering off yet again. A couple of these stocks, Divi's Laboratory was up close to 5%. Now it's up just around 2.5% odd. Sun Pharma, by the way, has moved into the red. So that's a relative underperformer if you compare it with what's going on with some of these pharma-related stocks. And a couple of these auto names as well. Eicher Motors as well as Bajaj Auto. Both those two-wheelers should come up for you. Both of them have suddenly moved to the low point of the day. So there is some selling pressure, though we have bounced close to 50 points from the low point of the day. Well, let's slip into a short break. We'll come back. We'll discuss more with Dipan Mehta. For the time being, though, let's slip into that break. And as we do that, here's something that you, our viewers, must take note of. CNBC TV18 and the National Stock Exchange, well, they've come together to promote investor awareness through a very special campaign, Informed Investor. Now, that empowers you to make the right decisions with your money. An investor needs to remember to fill in all the relevant details correctly and completely in their KYC. They need to strike off all inapplicable clauses. Leaving any slot blank could lead to someone else making a choice for you, thereby making a financial commitment on your behalf. Ensure that you fill the KYC document on your own and receive the duly signed copy of your KYC documents from your broker.
okay, the market's getting mauled, and how? 523 points lower, 17,012. This is, 25 points or so from the day's lowest level, practically at the day's low. Metals are taking a huge knock. I mean, JSW Steel, Hindalco, these are the top two, by the way, nifty losers right now. IndusInd, look at IndusInd Bank, back at 900. IndusInd, of course, has been correcting even before this latest scare. It's perhaps amongst the larger banks, the worst performing private bank. There is Adani Ports, which is coming off 6%. BPCL, ONGC are others which are off. Tata Steel is the other one along with JSW and Hindalco. Tata Steel is down 5.5 at 1108. Maruti is down, NTPC. I mean, it's a big list of losers. Dipan, just a quick word on metal and steel stocks. There's a high beta function here.
Yeah, absolutely. And I think the correction in prices is certainly impacting the sentiment in these stocks. But I would say that from a point of view of valuation, there's a lot of comfort over there, and higher volumes and lower interest rates may sustain earnings going forward. So maybe whenever the market flattens out and there's a rebound, you could see the metal stocks perhaps being first off the block in terms of a turnaround.
Okay, all right. Dipan, I don't know whether we have my colleague Nisha with us actually. I'm not sure whether we do have her, but she had broken a story earlier today with regard to Apollo Hospitals. Now they've been looking at getting a strategic investor in one of their verticals. So let's actually hear that out and then come back to you, Dipan. So let's get straight to the CNBC TV18 exclusive. Apollo Hospitals retail chain, Apollo Pharmacies, they are making a move in terms of expanding their online sales and also move towards being a dominant omni-channel player. Nisha is joining us to fill us in with all of those exclusive details. Nisha?
What sources with direct knowledge have been sharing with CNBC TV18 is that Amazon, the largest giant globally on the online space, is looking at a partnership with Apollo Hospital Enterprises pharmacy business, which is the Apollo Health Co, which is being created with online and offline business verticals of the group. This will be a very fitting combination to enhance the online presence of Apollo Hospitals pharmacy business with Amazon coming in. And on the other hand, for Amazon, there will be an offline combination. So an omni-channel approach is what they're looking at. I must clarify that we are not clear whether or not immediately Amazon is going to pick up stake in the company, but Apollo Hospitals has been in talks with several investors for selling a minority stake of up to 20% for raising at least $500 million in Apollo Health Co. And most of the investors have shared that they will be backing and looking at the contours of the partnership with Amazon and will bet their money if Amazon comes in as a partner. And there again, I'm gathering that $2.5 to $3 billion is the pre-money equity valuation that the company is looking at. This space is getting hot with Reliance, Tata Digital already making acquisitions in online pharmacy.
All right, Dipan, Nisha brings us that exclusive, and the stock even today is more or less flattish. Well, the markets are really seeing a lot of selling pressure. For the month, it's up close to 30%. Valuation-wise, not cheap. What would your call be on the sector as well as on Apollo Hospitals?
See, I think the Apollo Hospital management has done a fabulous job over the last 2-3 years or so, which is why it's been such a spectacular outperformer. It's a story about improved productivity of all their assets. And this particular COVID had initial impact, but over the medium to long term, it will be very beneficial as more and more spends take place on the healthcare side. And rather than waiting to be disrupted, I think Apollo Hospital is taking a plunge on the digital side as far as healthcare is concerned, not just on online pharmacy, but even online consultation. And they have many plans to kind of grow the business in a asset-light model basis. And that's quite positive. And valuations have always been high for Apollo Hospital from the time they've been listed because of the nature of the business and the kind of prospects which the company has got. So I would say that at corrections, Apollo Hospital is still an interesting bet. And you have to have a slightly longer term view, 3 to 5 years or so. And I'm sure this company will be much bigger in size than it is just now and still provide outperformance versus the Sensex and Nifty. So very positive on Apollo Hospital. And as I said, I think next 2-3 years are critical. Most of their assets are in place. It's just that you have to get maximum revenues out of all the hospital beds which they have already invested in.
Okay, Dipan, thank you very much for your time. It's a pleasure. Appreciate you joining in this Friday. Thanks indeed. There's 4 minutes to go for close. I don't know if you've got Mitesh with us. 530 points lower. Mitesh, 30 seconds, quick word. What are you seeing? 530 lower now.
So Prashant, I've been talking about much lower levels than this, but the only thing is that today, is this a good entry point for a fresh shot? I would say no, because you are always susceptible to 100 to 120 point kind of pullback. In case you get one closer to 17,200, I'll be comfortable shorting. Otherwise, if somebody has position, hold on to them with a revised stop loss close to 17,230. And if you don't have it, then you missed the bus.
All right, fair enough. Mitesh, thank you for your time. Good speaking with you, as always. I think we're going to end around the 17,000 odd mark. Let me just quickly start recapping things. So almost all sectors down. The healthcare, the pharma indices are the only ones which ended higher. So metals, of course, top losers: JSW, Hindalco, Tata Steel, then Tata Motors. IndusInd Bank is now under 900, a big loser. Adani Ports down about 6.25%, 715. BPCL down 5.5%. ONGC down 5.5%. ONGC is back at 146. And you look at what else. There is Tata Consumer down 5%. Maruti is closer to 7,100 now. There is NTPC, HDFC Limited, Bajaj Finance. So across the board, a lot of selling coming through. The gainers, Cipla, DRL, Divi's Laboratories are the only meaningful gainers on the Nifty. Otherwise, you've got, and actually there's only one other gainer, 4 gainers in total. Nestle is the other one with 1/3%, so it's absolutely flat. So 46 out of the 50 names in red today. Nigel.
Well, all those unlocked themes, they really got clobbered today. You have Interglobe Aviation, SpiceJet, both of them did see selling pressure. You had cinema exhibitors, whether it was PVR, whether it was Inox Leisure, both of them took it in the chin. Hotels, well, Indian hotels, Lemon Tree hotels, Chalet hotels, all of them were, did see a lot of selling pressure. In fact, some of them were down more than 10% in trade today. Travel and entertainment, markets got nervous on that front as well. Mahindra Holidays, your Delta Corp, Thomas Cook, all of them were down in today's session. And retailers as well did see selling. Even larger names like Bata, well, that stock was under some pressure. Shoppers Stop was under some pressure. Phoenix Mills as well did see some selling. And you had Trent as well that was under some pressure in trade today. On the flip side, though, you had a few winners, the relative outperformers. Welspun India, well, that one did pretty well in an otherwise dull market. Welspun Corp as well, that was doing a relative outperformance for majority of the week, though that stock did sell off from the high point of the day. Linde India came back onto the buying list. That stock was up close to around 3% odd. And Godfrey Phillips as well was up roughly around 3% in today's trading session. So we are ending around that 17,000 odd mark. There was pressure in the broader markets, the breadth of the market as well. Just one stock that was advancing, or around 4 stocks that were declining. The bears, they get into this weekend parting because we did see a sea of red to wind up today's trading session. Well, that's it from the team at Closing Bell. Wishing all of you a good weekend ahead. Well, as we wrap down on this session, we'll wrap up, but you stay with us. Lots coming up on the other side of this short break. Well, what are the different index funds that you can consider? We'll ask Radhika Gupta, MD and CEO of Edelweiss MF, in our special offering, Smart Money.